What's going on, everybody? Hope you guys are doing well. Today we're looking at the Advanced Timing and Intraday Market Profiling Guide, Part 2. So if you have not watched the first video, pause this video, go and watch the first one. It'll make a lot more sense after you finish that. We're going to try and answer some of the major questions that some people had that they messaged me regarding that video. Specifically, what classifies as meaningful manipulation, identifying low probability conditions, more data on each of the profiles for classic and New York reversal, as well as the relation to weekly profiles. So sometime in the future, there's going to be a part 3 of this video, which will regard entry techniques with the 8:30, 9:30, and macro times, as well as a full PDF that'll cover parts 1 through 3 and the full New York session schematics on a price scale. So both time and price for the entire New York session, how you can frame models, how you can create a trade plan, and basically how to use all this data on a day-to-day basis. First of all, I want to specifically mention that daily bias is still the most important part. So you have to have a daily bias first of where we're likely to go to directionally. Is it going to move higher to sweep liquidity or fill in a balance, or is it going to move lower to sweep liquidity or fill in a balance? And once we have that, right, that's the first step, then we can start to drop to a 15-minute or an hourly time frame and look at what London did. So using this top-down analysis, we allow for variance. So every single day is not going to be perfect. We're not going to have clear manipulation. Sometimes we have to make adjustments as to what our rules are, as to what qualifies as manipulation. Other times it's going to be a textbook example. Okay, so having a framework that you can kind of mold around the bias will be helpful instead of having a really clean-cut way and not patterning it, but using the logic that I'm trying to portray in these two videos. So the time frame that I'm specifically looking at is anything above the 1 hour chart. So greater than or equal to the hourly chart, we want to see some sort of PD array that price is trading into during London session, which would be between 2 and 5 a.m. Eastern Standard Time. And then the PD array that I'm looking at will either be a fair value gap, some sort of external range liquidity, and I'll get into examples of what that would look like, an order block, and that's really the major three. During London session, say we have an open low-high close, we're bullish on the day. Does London session between 2 and 5 manipulate into one of these three PD arrays? And then after, have some sort of a market structure shift or SysD outside of that range. Okay, so this can be on either the hourly chart or the 15-minute chart. But I'm looking for, once we manipulate into that PD array, do we now have confirmation that that was the low? I'm also looking for something like SMT with ES. I guess it doesn't really matter what chart it is, but we're looking for SMT as well on that low. So this is basically the framework that I'm looking for, as if London manipulated, it checks off these boxes, well then New York is likely to expand into the drawn liquidity, right? Also framed on the bias. We have to have a bias first. So if we have something like a hourly inefficiency, say in a short-term discount, we drop into it during London, say at this point it is, I don't know, 335. We expand out of it, we have a clean SysD or market structure shift. Then at that point, as we approach New York session, I'm looking for a price to probably drop into the SysD or into some sort of internal range liquidity, and then trade out of it into London close. Right? So this is the checklist that I'm looking for meaningful manipulation. Hourly or 4-hour PD array between 2 to 5. The PD array specifically does not have to be at 2 to 5. It just needs to be before that. The drop into it or drop above needs to be at this time. Fair value gap, ERL, order block, market structure shift out of the range, and then SMT at this low is going to qualify that as an SMR. So I need to see some sort of SMT during that range as well to make sure it's actually the true reversal. Okay, so it's very clean cut. I hope this makes sense, and it removes some of the skepticism as to what timeframes we need to look for and what we need to qualify as meaningful manipulation. Same applies for a New York session. Okay, so if New York is creating the higher low of the day, well, then we can do the same thing here. Say London failed to have any manipulation. Maybe it dropped into this PD array, but we don't have any clean market structure shift or SysD out of it. We're still kind of just trading lower, right? Well, then I'm expecting that New York session is going to do the same exact thing. We're going to have some sort of maybe external range liquidity here, and the ERL in this case is going to be some sort of time-based liquidity pool. Okay, so it could be previous session low, previous day low, previous week low. All those are time-based. So it's not going to be a random swing high or swing low. It's got to be time-based liquidity. So in this case, we're going to have some sort of pool. There's going to be between 7 to 10. We're going to drop into that. We're going to have some sort of change in the state of delivery or market structure shift outside of that range on the 15-minute. And then we're going to have SMT here. And then at this point, you will be looking for London high as our low-hanging fruit objective. Okay, so you can kind of work and play around with what you want to see, but it's a very simple framework once you understand. It's either going to be London manipulation or New York manipulation, right? So if it's London, then you're going to be looking at, say, London low of day. You're going to be looking at New York continuation. And we already covered this in the first video. And then if we have failed manipulation, then we're going to have New York low of day into London close. Now, it's good to be flexible in this. Okay, so sometimes we're not going to have a clean order block or a clean fair value gap that price is manipulating into. The SMT is going to be really, really important in this. So sometimes London may not look like it's manipulating on NASDAQ, but on ES, we get that clear drop into a bullish order block on the hourly chart. And then we have the SMT there, and then we're starting to leave it. Well, then New York is likely to continue to expand. So go into old data and look at this, and I'll show you some examples at the end of what the minor fluctuations are, but it's something that you have to just see over and over to get a good framework of it, but also to see the variations. So the second part of this is identifying the low probability conditions, specifically the swing to Z profile. I mentioned in the first part that swing to Z is going to be the one that's most difficult. It's going to be the one that's hardest to find trades. It's going to be the one that consolidates the most. And a lot of times we have data beforehand that'll point to this day is likely to be swing to Z, and we can either avoid it completely or take it very, very cautiously. So the economic calendar is going to be a big part of this. I suggest studying it, but things like non-news days or days before we have 8:30 news, that's going to be days where we can likely to see swing to Z. And we don't want to be engaging in that. So using the red folder news to our advantage, that's going to be the most probable that we have a nice expansion day. And then say we didn't have access to the economic calendar, the days where New York reversal or London manipulation is going to happen is most times between Tuesday, Wednesday, and Thursday, right? If we think about this on a weekly profile scale, and we could segue into that as well, if most weeks we have to classify them as a classic, well, then we want to be capturing this part of the range on the weekly candle. And on each of these days, say this is Tuesday, Wednesday, Thursday, we're likely to see that kind of expansion up, and we can either assume it's going to be a classic buy day template or a New York reversal template in each of those. So if I had to pick which days I'm likely to see one of those two, it's going to be Tuesday, Wednesday, Thursday. And then after that, Friday would be, like, I guess the second highest probability after those three, and then Monday. So these are the days that you want to be kind of categorizing it, and you can obviously pair that with the economic calendar. Like if Wednesday, for example, at 8:30 news, then I look at Wednesday. Same thing with Thursday. For this week, I'm looking at Tuesday, Thursday, and Friday based on the economic calendar. So that's going to be crucial to identifying swing to Z. I also want to mention that when we move from ERL to IRL on the 15 or the hourly, that's going to be typically low probability. That's going to be our swing to Z. Because if you look at the swing to Z profile, typically it looks like this, where we have this kind of range, and then we're range bound the rest of the day, right? And then at this time, we have 2 to 5. At this time, we have 7 to 10, which is our New York open. And then within 10 to 12, we have this kind of range bound price action. So typically between 7 to 10, we're already reaching our daily objective, which could be, in this case, external range. And we're going to retrace back into premium. And it's just going to consolidate in that range. So for example, if you saw that it's a low probability day based on the economic calendar, you come into the chart and at 9:30, we've already taken out something like the previous week low. Okay, that's an important time-based liquidity pool. Well, then at that point, I'm not expecting that the New York session is going to do a lot post 9:30. Instead, we're going to look for that internal range gap, most likely in premium, that we either could target or we just completely avoid the day because it's likely to be range bound inside that gap and not likely to displace and form this large expansion day that we want to be capturing for the rest of the New York session. Okay, so it's going to be based on the economic calendar. It's going to be based on the ERL to IRL. So specifically look at, has the daily objective been met prior to 9:30 open, or I guess even the 8:30 open, but specifically that New York session. Okay, that's what I'm looking for. But swing to Z profile is really just the low probability setup that you'll have. So days before 8:30, days before CPI, days where, like on Fridays, for example, if Thursday has already met the weekly objective, well, then Friday is likely to be a swing to Z day. So it's really, you have to use the data that you've been given from the weekly profile. You have to use the daily schematic, whatever's been showing so far, and pair that with what is New York session likely to do. Is it likely to expand based on the higher time frame and the lower time frame? If not, then we'll see something like a swing to Z. And I normally opt out of these kind of days. I can simply just avoid them. I either just don't look at the charts or we'll take it really, really slow on stream. So now we can segue into more data on the specific profiles that we're going to use. So the classic London manipulation and the New York open reversal. So we'll focus on this one first. So targets. If we think about this in the daily schematic for the New York session, well, most times if London is creating that SMT, we're going to have an internal range gap. It's either going to be on the 15-minute or the hourly, so we know what time frame it's going to form at. M15 or the hourly IRL. Well, if we're moving into an internal range liquidity pool, we need to be targeting some sort of external range liquidity pool. This is typically what we'll see. Not all the time, but most times. So if we're looking at this external range liquidity, it's either going to be some sort of a previous day high, the previous week high, or the current week high. So say it's a Wednesday and this is the Monday high. Well, then we're looking at this to be the current week high. So it's going to be some sort of external range liquidity on the higher time frame. And most times it's not going to be just the internal range gap or some sort of inefficiency. You'll see this kind of profile a lot of times to finish out the market maker model on the higher time frame, right? Because this is typically, this will be your second stage of distribution on the higher time frame. That's something to look at. So you'll be completing the daily objective or the weekly objective, and it'll be targeting this IRL to ERL on a higher time frame. Now for the New York session, our low-hanging fruit objective every single time we have a New York open reversal is going to be London high or London low. In this case, we're just looking at the bullish examples, but London high, that London swing point, is always going to be the target. And we're also going to be targeting this 10 to 12 time zone. So we have a draw on time. We also have a draw on liquidity. So anytime I'm trying to trade the New York open reversal, it's going to be targeting the London high or low. And also it's going to be targeting post 10 a.m. Same thing over here. I'm going to be targeting some sort of external range liquidity pool. And this is going to be reaching into 10 to 12. Now for the New York open reversal, this either can be some sort of higher time frame array. It could be either an ERL or IRL. It really depends on whatever profile is given and how it relates to the daily range. So it's not as specific as this previous day high, previous week low. But I mean, typically in here, we're going to be manipulating a lot of times into some sort of higher time frame inefficiency, and we're targeting the London low. But it really comes down to whatever schematic is forming at that specific time. So I can't give exact data on what's going to form here. We're still going to have things like SMT on each of these levels that you can look for. But really, what you should get from this is when we have a classic expansion, so when London creates the lower high of the day, then we're looking for some sort of higher time frame external range liquidity, or some sort of relative equal highs, some sort of 4-hour inefficiency that we can be targeting. And then over here, I'm going to be looking at London high or low as target. And then anything after that is extra. And sometimes on some of the live executions you'll see on stream, that's why I'm marking out some of this as extra. We don't have to reach there, especially if the time of day is right and we've already taken out London high or low. well, then this pool or this inefficiency is now extra in the sense of we don't have to reach down there. We can if it wants to continue to expand. Okay. Also, if we think about this, say this is 930. We form the low of day at 930. Most times during the New York Open reversal profile, we'll have expansion further into London close. So it's not going to be right at 10 we stop and we're going to just completely reverse the range. Most times it's going to be further into the London close. It's going to be normally post 10:30, sometimes even into 12. Sometimes it continues all the way into the rest of the day. It could be even going all the way into something like 3 p.m. I suggest you study this. I suggest you look at it. But from my own backtesting and from what I've seen, when we have a New York Open reversal profile, we're expanding past 10 a.m., normally into 10:30. Sometimes even this is the low of the day and we continue all the way into 3 p.m. And that's something that you can use as further targets. You can use as just holding or taking runners that are likely to expand into further R multiples. On this one, as soon as that draw on liquidity is hit, as soon as it hits 10 a.m., a lot of times I'm looking to close, or I'm looking for, okay, we could come back into the range. It's not likely that we have to expand into 10:30. We can. There's nothing wrong with that. But on these kind of days, I'm looking for it to go more deeper into London close. On these kind of days, it can kind of just hit right at 10 a.m., maybe go further on, but you got to really be careful of, is time and price correct? And just not be super greedy and wanting more than what's been given on the screen. So this is the refined diamond that we can kind of extract from all that data, right? So in terms of targets for both of the profiles, it's either going to be an M15 or an H1, ERL or IRL. If it's ERL, it's going to be time-based. If it's IRL, it's going to be in premium or discount of the most recent dealing range on a higher time frame, right? And then targets, most times we're going to be targeting post 10 a.m. Other times it's going to displace into 10:30. Other times it's going to displace all the way until 3 p.m. But in terms of the absolute minimums, the new low or the new high needs to be formed post 10 a.m. And we're going to be targeting some sort of H1 or M15, ERL or IRL. Okay, it's a very simple way to frame it. But then now if we understand something, like if we get in, say, at the 950 macro, well, now I'm just targeting, we're likely to expand for another 10 minutes at least. And if we reach our previous week high, for example, our previous day high, but it's 9:59, well, I'm going to continue to hold it until it's the time of day. If it's 10 o'clock and we haven't met our previous, or whatever our draw on liquidity is, well, then we're going to keep going until that draw on liquidity is met. So there needs to be a combination of both the draw on liquidity being met and the draw on time. So think of this as a crosshair. If one of the X coordinates isn't met, we're going to continue. If the Y coordinate isn't met, it's going to continue. If both the X coordinate and the Y coordinate is met, we don't have to do anything else. And everything after that, in my mind, is extra. So it's got to be both. It's not just one. It's not just because the draw on liquidity is met, we're going to end. Obviously, there's nothing wrong with that. We can take partials on draw on liquidity, and that's perfectly fine. But in order to capture the +1, the extra end of the range, there needs to be a time element to it. Same thing though, you can't just use, just because it hits 10 a.m., I'm not going to close out a demo position. But if it hits 10 a.m. and we keep going and then we hit an hourly inefficiency, something like that, then I'm going to consider, removing off any runners or closing out the position. So just like how we have session profiles and daily profiles, we also can look at weekly profiles, right? So it's fractal in nature. And if we can frame when the weekly high or low has been put in, well, then we're likely to see expansion days that follow, right? Either in the sense of a classic London high or low of the day or a New York Open reversal. So the things that I'm looking for in relation to the weekly profiles, there's really only 3 weekly profiles. And I'll link some videos in the description. I'll put one up on the screen of what you can watch, or either I'll make one too. But there's only 3 weekly profiles. The ones that I look for is either a classic, we have a midweek reversal, or we have a consolidation reversal profile. The classic and midweek are going to be the best, and then consolidation reversal typically happens on a low probability week. But it's not super important that you know when these happen. I just like to know when is that weekly higher being formed and on what day it's being formed. So classic, typically you have anywhere from Monday to Tuesday, sometimes early on Wednesday. Midweek is going to be Wednesday most times. Consolidation reversals when we form it on Thursday. So earlier in the week that we can form that higher low, it's likely to have more expansion days on the week that we can capitalize on. So the time frame that I'm specifically looking for that weekly manipulation, right? Weekly is going to be the H4 or higher. So anything above or equal to the H4. So, and I'm same exact thing. We're looking for a fair value gap, external range, or an order block that price is trading into. And there needs to be some sort of SMT. All of those combined, and if we have displacement out of it in the form of market structure shift or a SysD, well, then now we've basically confirmed that the weekly higher low has been put in, and we're likely to see on that very next day or until the weekly objective has been met, continuation profiles. Classic London protraction or a New York open reversal. And that's how we can capitalize on that, especially if you compare it with a time of day. Like say we have the news profile where we have, let's say we have Tuesday trading up like this. We start to displace out of it. We have SMT on the 4-hour chart between ES and NASDAQ, and we have a clear SysD. Well, if I know that this is Tuesday, well, then we're likely to see expansion into most likely Thursday. And that would be your classic weekly profile. So now I know between Wednesday and Thursday, we're probably going to see some sort of open, high, low close. And now I'm just looking at where at New York at 8:30 or 9:30 are we in this profile. If we're opening up here at 9:30, then we're going to see it 9:30 trade up, create the reversal point, and trade down into London close. If we open up over here during New York, well, then London has already created the high of day, and we're likely to continue to drop into London close, and New York serves as the continuation factor. And to review briefly, we already have a greater than or equal to an H1 PD array that's been met during London session, right? And we have some sort of SMT here, etc. You can go back and watch that if you want to. But it's all fractal, right? We're just looking for a PD array, a key time, and a key level that we can use that as a framework for reversal. And anything that happens after, we're either looking for as an entry point or a reason that we're likely to continue on the weekly range, on the daily range, or the session range. It's this fractal nature of we're going from a weekly profile down to a daily profile, down to a session profile. And all of them, if they line up, well, then we're likely to see a really, really high quality entry. We can use time to exit and time to enter. And we've removed a lot of the necessity for this lower time frame price reading. It's really, really beneficial if you understand it, but it removes a lot of the stress of, okay, if this holds, should I get in here? Well, okay, we find 9:30 manipulates. First PD array that happens after 9:30, we can get in and trust that it's going to hold all the way until 10 a.m., all the way until 10:30. So I hope that some of these have answered your questions. I'm going to still continue to take questions if you want to leave them in the comments, and I'll try and add them into part 3 and into the PDF, but we'll get into some examples now. So we'll just briefly look at some examples, and then you can go into your own charts and find some examples for yourself. But we're just going to look at the manipulation. If you remember from earlier in the lecture, we're looking at a greater than or equal to, if I can type it out, H1 PD array, specifically an order block for value gap or some sort of liquidity. And then we're looking for a market structure shift or a SysD outside of that range to confirm that that's going to be the reversal and some sort of an SMT. Okay, so manipulation and then confirmation of manipulation so we can look for the expansion afterwards. I'm going to just look at an hourly and a 15-minute time frame. Obviously, we're disregarding the fact that we're just assuming we already had a bias going into it, and we're just looking at the specifics in terms of the PD arrays. So we're going to already assume that you have a bias. You can't just go in and pattern these kind of things. So looking at today, we had this drop into an hourly inefficiency as well as an hourly order block. There's going to be some overshoot there given it's Monday, so we don't have to demand precision, but you can see here London session did drop into that hourly inefficiency, but we had no sort of market structure shift or SysD out of it, right? Even if you go to the 15-minute chart there, there's nothing that indicates we want to move higher. So we're going to expect that New York is going to create that low of the day, and we actually got it in at 8 o'clock. And you can probably see there's some sort of SMT either during that time frame or during the New York session. So in here, there's not really any clear SMT. Actually, I guess with that low, there's one right here between this low and this low here. Right, so that would be the SMT that confirms that. And then you can also look, and there was 945 SMT between here, the 945 and 930 candles, if you look at those two right there. So that was another example, right? Because we're going to have SMT at the low and on the entries. So if you go back to the hourly chart, same thing in here. Bearish bias, for example. So we're looking for that open, high, low, close. Already assumed. We're looking for what did London do. In this case, London kind of just traded lower. We didn't have any manipulation. It's a very, very weak profile. But you can see there's a fair value gap here. We failed to trade up into it on NASDAQ. And then in ES, we have this SMT where we trade into this fair value gap, failed to trade into it here, also taking out the London high. So this would be another example of SMT, confirming that as the potentially daily high or the session high, and we're likely to move lower. Thursday, probably something similar. We have, let me see if there's SMT here. Trying to find a good classic expansion, and we can look at that just so we can find at least one example. Same thing in here. In this case, it's an external range liquidity. We sweep it during New York, have SMT there. So order blocks are going to be the hardest one. Obviously, the easiest one is going to be just finding a fair value gap or some sort of external range liquidity that we're manipulating. Order blocks sometimes are harder to spot as the meaningful manipulation, and that's why the SMT is just going to be paramount to finding the clear manipulation. So in this case, we have this really low probability order block. There's not really a clear displacement leg that happens after it. We have this inefficiency, I guess, that we're also trading into. But I'm looking at, is there an SMT here? To confirm that as the reversal point. So in this case, we do have, we zoom in, probably do have some sort of lower time frame SMT between, yeah, you can see really, really, really tiny, but there's SMT right there between that low and this low. And if you drop down to a 15-minute chart, something like that, you'll see the SMT in that. But that's a PDRA SMT. Probably could find one last example of some sort of hourly inefficiency, a SysD out of it, something in here where we're dropping into, same kind of thing. That's a very low probability order block that we're trading into. You can find the SMT there. And then the market structure shift obviously is confirming everything. So zoom down. Yeah, tiny SMT here too. It's easier to look at the 15-minute chart. I'm not going to switch it just for the time's sake, but right in here, even SMT. Failing to drop. So if you go to the 15-minute or 5-minute, you'll see that was a swing low. We dropped down there, failed to manipulate, etc. But yeah, it's something to study. I would suggest, highly suggest looking at it for yourself on all these different days. But basically just looking for that meaningful manipulation. And the way you look for it is first bias, understanding where we're likely to displace to. Then from the bias, you already know it's going to be an open high low close, open low high close. Then you're looking for that greater than or equal to an hourly PDRA in the form of a fair value gap, external range, order block, and then some sort of a market structure shift or a SysD out of it. Typically, this happens on the 15-minute chart. And then also SMT at that reversal leg. And if London failed to manipulate, then we're going to look for New York to create manipulation. So New York manipulates and reverses. If London did manipulate, then we're going to look for New York to continue. Both of these into London close, right? And also into some sort of a M15 or H1 PDRA. Okay, so that's basically the full thing of looking for manipulation and how you can classify each one. And then obviously you compare this with the part one video with including 8:30, 9:30, and 10 o'clock into the daily profile and what time we're forming the high or low of the day. So if you see something like London failed to manipulate, and then we have previous day low, and right at 8:30 news, we sweep that previous day low, and we have a market structure shift, well, then we can really, really trust that that's going to be the daily low, especially if there's SMT. And at 9:30, we're going to expand. At 10 o'clock, we're going to expand all the way until London close, until the time of day is correct and until the price point is correct. Right? So it's really like this, it's math. It's like if this, then that. And you can use the data points that you've gathered from the charts and from implications, especially with SMT and things like that, and then basically create this model of what we're likely to see next. And if we don't see that, we don't execute. If there's no setup, there's no trade. If we do see everything lining up clearly from higher time frame to lower time frame, then it's much easier in my opinion, to frame a good setup. Okay. So in part 3, we'll go over the kind of executions and entry models that I'm going to frame on each of the swing to Z, the New York Open reversal, and the classic expansion. What kind of setups are optimal there, what kind of entries and continuation entries you can find. And then in the full PDF, we'll try and cover everything from daily bias down to entry and stop management, things like that. So hopefully this part 2 clarified any of the glaring questions you had from the part 1. If it was helpful in any sense, consider liking and subscribing. I would really appreciate it and would help pump the video out to others who may be struggling with this topic. If you have any questions, please leave those in the comments below. And if you want to really improve and apply these concepts daily, I have a private group where I'll live stream almost 3 to 4 times per week, as well as one-on-one mentorship that's available to you. And those links will be in the description below. So until I catch you next time, stay safe, good luck, and good trading. Peace.